Welcome to Informed Investor. Infosys, India's second largest IT services company, has just released its fourth quarter fiscal year 25 results, and to be honest, the numbers have left investors and market participants a little disappointed. Not only did the results fall short of street estimates, but the company also issued muted revenue growth guidance for fiscal year 26 in the range of 0 to 3%, signaling continued caution. This muted guidance from Infosys and Wipro is the reflection of a worried Indian IT sector, which has been grappling with tepid demand and weak discretionary spending. Let's break down what's happening and what it means for the sector. Before we dissect Infosys numbers, it's important to understand the broader context. The Indian IT sector is navigating a tough global environment. Several factors are at play. The return of President Donald Trump and his aggressive tariff policies have triggered a wave of uncertainty. These tariffs are not just impacting goods but are also weighing on services, including IT exports, by raising costs and delaying client decision making. Secondly, US Federal Reserve Chair Jerome Powell has warned that ongoing trade tensions could stoke inflation and that the Fed is in no hurry to cut the interest rates. For Indian IT, which derives over 60% of its revenue from the US, higher interest rates and a cautious Fed means slower recovery in client discretionary spending, thereby affecting Indian IT firm earnings. Thirdly, with the US and European clients tightening their belts, Indian IT firms are seeing delays in new projects and reduced budgets for non-essential IT initiatives. This is affecting most Indian IT firms that derive a significant chunk of revenue from these markets. Now let's look at the numbers that Infosys just reported. For quarter 4 of fiscal year 25, the company recorded revenue of 40,925 crore, which represents a 7.9% year-on-year growth, but a sequential decline of 2% from the previous quarter. While this might seem positive at first glance, when we look at the profit figures, there's a bit of concern. Infosys posted net profits of 7,033 crore, marking a significant decline of 11.7% compared to the previous year's 7,969 crores. On the positive side, operating margin stood at 21%, showing an increase of 0.9% year-on-year. This suggests that despite the challenging environment, Infosys has been able to maintain some operational efficiency. In terms of geographical revenue, the United States continues to be Infosys' largest market and contributed about 57% of revenues. If you see, growth here has slowed due to macro headwinds discussed above. So now you know how important the US market is for Infosys, deriving more than half of its total revenues. India contributes a mere 2.9% of the total revenue for Infosys. In terms of segment mix, BFSI, manufacturing and retail remain key verticals for the company. Lastly, in terms of deals, Infosys recorded total contract value of large deals wins at $11.6 billion for the year, with 56% being net new business. For the fourth quarter alone, Infosys bagged deals worth $2.6 billion. Additionally, the board also recommended a final dividend of 22 rupees per share for FY25, but that's cold comfort for investors focused on growth. Now, what did the management have to say? Infosys management has acknowledged the tough environment, setting a conservative constant currency revenue growth guidance of 0 to 3% for FY26, with operating margin guidance at 20 to 22%. Moreover, in a forward-looking move, the company also announced plans to hire 20,000 freshers, signaling a commitment to long-term talent development despite near-term headwinds. Now here's the bottom line. The Q4 numbers from India's top 3 IT players, TCS, Infosys and Wipro, have all been slightly disappointing, with muted growth and cautious guidance. The IT sector is facing several headwinds. Elevated US interest rates, sticky inflation, Trump's tariff policies and a global slowdown are all weighing on client budgets and decision making. There is also the R word going around. If the US slips into recession or the trade war escalates, Indian IT firms could see further delays in recovery. Lastly, the IT sector is at an inflection point, with firms accelerating automation, AI and geo-diversification to build resilience. Now, as an investor, a wait-and-watch strategy seems prudent. The next 2 quarters will be crucial. Investors should look for clear signs of recovery in Western markets, like improved economic data and easing trade tensions, before turning bullish on the sector. In summary, Infosys Q4 FY25 results are a wake-up call for the entire Indian IT industry. The sector's resilience will be tested in the coming quarters as it navigates global turbulence, but with strategic pivots and patience, there's hope for a turnaround down the road. Now moving on to some other important market updates. Niti Aayog CEO BVR Subramaniam projects India will surpass Germany and Japan in 3 years, becoming the third largest global economy. With the current economy of $4.3 trillion US, India could reach 30 trillion by 2047, potentially securing the second spot. Subramaniam also highlighted India's strength as a global supplier of working age professionals. Second, Coromandel International, Paytm's 197 Communications, and Nykaa and Adani Energy Solutions may join the MSCI Global Index, which change is effective from May 30th. With the inclusion, these companies are expected to receive significant inflows. Thermax and Sona BLW are expected to be excluded. Next, Jio Financial Services reported a 2% increase in its fourth quarter FY25 net profit to Rs 316 crore and an 18% rise in revenue to 493 crore. The company's lending, digital payments, and insurance businesses showed strong growth. The board proposed a 0.5% per share dividend, with shares closing 1.6% higher at 246.2 rupees. Next up, HDFC AMC reported an 18% rise in Q4 net profit to 638 crore, with revenue up 30% to 901 crore. AUM grew 26% to 7.74 lakh crore. The company proposed a 90% per share dividend for FY25. For FY25, net profit also increased 27% to 2,460 crore. Lastly, Tata Elxsi reported 13% drop in Q4 net profit, which stood at 172 crore. The company declared a dividend of 75 rupees per share, payable after the 36th annual general meeting. Now, having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.